Good evening, friends. I extend a very warm welcome to all of you. This is our 20th webinar of Knowledge and Educating India Inc. This present topic is not a topic only, it's a lifestyle of capital market. We must know what is happening in the capital market, how it is happening, who is doing, and why he is doing, and what is the fate ultimate of this particular wrongdoing. To understand this particular wrongdoing in the capital market, we are organizing this program, Frauds in Indian Securities Market. Friends, we have invited today a very experienced and knowledgeable and who has done more than 500 investigation, and that person is none other than Mr. V.S. Sundaresan. I welcome you, sir, Mr. V.S. Sundaresan, who is Executive Director of SEBI. Mr. Sundaresan took charge as Executive Director in SEBI on December 9th, 2019. Prior to his promotion as Executive Director, he was a CGM in Inquiries and Adjudication. Mr. Sundaresan has more than 30 years of experience in development, regulation, and protection of interests of the investor in securities market, and he has worked in various departments in SEBI. His past assignments include formulation of enforcement of regulation on issuance of security, listing. He is expert in takeover, buyback, delisting, trading, clearing, and settlement risk management, dematerialization, registration, and supervision of a stockbroker. So he has worked in all the departments in SEBI which are there. He has supervised more than 500 investigation cases on market manipulation, insider trading, takeover, public issue, collective investment, compliance with continuous listing requirement, etc. Sri Sundaresan has been a member of various SEBI's and inter-regulatory committee. He is a graduate in commerce, holds post-graduation in finance and human resources, and a degree in law. He is also certified associate member of Indian Institute of Banking and Finance. Mr. Sundaresan is a prolific writer as well as he is, you can see his order, and he is a strong believer in sharing of knowledge and has delivered more than 350 lectures, which include more than 25 lectures in overseas seminar on various topics related to securities market. Mr. Sundaresan is a perfect example of how a person from a humble background and beginning attains success and high position by dint of hard work, dedication, commitment, and above all, passion for perfection. I welcome Mr. Sundaresan, and I hope that your experience will help us to know the market, to know the various things. Friends, today's program we have structured in such a manner. First, I will give introduction of this particular topic. Then Mr. Sundaresan will take up 3 case studies. And then we will have a question answer session. But our main focus will be that we are focusing more on Mr. Sundaresan's case studies, which will tell us that how people are manipulating market and how the regulator is becoming so smart and understanding that part and doing this. I welcome you. Vivek, can you start my screen? Friends, as you are aware, this topic is very interesting. And frauds in securities market is not today's. When the market started in 92, or first fraud came into market in 92, then SEBI got all powers. So you can understand the SEBI's evolution is on the basis of this particular fraud. Now, if you see this, that what is fraud? Fear and greed is a stock market game, bulls and bear. Bulls represent greed and fear, and bear represent greed, their fear. So this game of bulls and bear is nothing but greed and fear. Now, what is greed? Greed make more money by any means. Fear means loss of getting caught. So people are having a fear that they will lose money or they will loss of getting caught. So sky is falling, so sell the sky. That is a concept. Lo papas karanam. The main reason of greed is the reason of the pap. That is a wrongdoing. If you see the securities market fraud, so I have divided into intermediaries fraud, trading fraud, company fraud, research report, investment advisor fraud, unauthorized trading, dabba trading, co-location, front running, market manipulation, insider trading, circular trading, price volume, synchronized, LTGC, reversal trade, illegal fund, IPO fraud, Ponzi scheme, GDR. So many things are there which has taken place in the market. Now, what is the reason of this particular fraud and how they are not detected at the early stage? First is diminishing of ethical values, poor governance, ineffective control, internal control system of corporates and various intermediaries, compliance in letter, not spirit, because law is always saying that you follow compliance in letter and spirit, not only the letter part. High volatility securities market, because it's going up and down. That's a one reason people think we can make more money. Lack of investor awareness and activism. Investors are not educated that much because they work on hearsay. Lack of protection of whistleblower. That is another aspect which I have identified. This is the reason. Now, if you see the timeline of Indian securities market fraud, you will find in 92 market manipulation, Harshad Mehta, Ketan, Parekh 2001, then account manipulation of Satyam take place in 2009, then illegal fund 2010, GDR fraud 2009 to 13, NSCL scam, IPO scam 13-14, Ponzi scheme 13-14-15, 15-16. So you can see this is going on gradually. Something new is coming. Earlier fraud is restricted, and this is an indicative timeline. Actual members, number of frauds in each category are much more. Now, first is a Harshad Mehta scam in 92. What was the modus operandi? Price volume rigging, insider trading, ballooning of BSE index, and bank fraud. That time NSE was not there. Total scandal was 24,000 crore of public money. BSE index fall from 4,500 to 2,000, and investor lost more than 1 lakh crore market capitalization. Then Ketan Parekh in 2001, again price volume rigging, circular trading, front running, and then BSE index crashed badly that time, and lots of investors lost money. Institutional investor, insurance company, mutual fund, they lost money. Then in 2007 and 9, front running case was there, which is still going on, that people are using this, and then impact is investor were cheated and the creation of distrust between investor and intermediaries. And Mr. Sundaresan will explain to you how the front running is going on and how tough is to detect them and how they have done this. That Mr. Sundaresan will cover in his case study. Then Satyam computer scam 2009, which has taken place. And in this case, first time overstatement of assets, manipulation of accounts, siphoning of public money, false disclosure, misgovernance, everything was there. Huge public money lost. Investor lost confidence in listed company because Satyam was the one of the best governed company. Then government has taken task force to handle the situation, and introduction of Companies Act 2013, and all these changes in books accounting was because of this reason. Then Sahara fraud 2010, illegal money collection, circumventing provision of public issue, non-disclosure, diversion of fund, repayment default, various things has taken place. Impact was huge money of 24,000 crore rupees were raised from 3 crore investor without following the IPO procedure and without giving disclosure. And as per the report, today the total 40,000 crore rupees is due with interest on Sahara Group. Then GDR fraud came in 2009 to 2013, and various companies, more than 60 to 70 companies. This is a few names, so don't confuse with this, only these names. What they have done, farcing and non-genuine offshore GDR they have done, making false disclosure, ballooning the market to lure Indian investor and create an intricate web of entities in offshore location for multiple transfer of funds, and before bringing them back to India, and they have created that this companies were doing very well without any base. Then Sarda Group is financial scam has come in 2013, and modus operandi was same. Ponzi scheme, collecting money from a small Low income investor, 100 rupees, 200 rupees they have collected. Assured return to investor, they have given 18%, 24%, 30%. Embezzled investor money, repayment default they have done. And the amount was 20 to 30 billion was lost by 1.7 million investor. And after that, the SEBI came out with CIS scheme, Ponzi scheme was restricted. And then so many measures SEBI has done. Then national, and here I will just tell one Sarda scam. What these people are doing in small places in Odisha, West Bengal, Eastern UP, they are putting this certificate of incorporation in their office. And they are saying that this is government related company. So the people have a faith in government envelope, and then people are, they are cheating these small investors in this. Then National Spot Exchange default case in 2013, that we have done fraudulent trading in commodity, excessive selling has taken place, false reporting to the regulator, diversion of fund, and default in payment and delivery. And the impact was that in July 13, and the trade settlement norms were changed in NSCL after these scam, and SEBI was replaced with FMCS commodity market regulator, because SEBI identified as a more strong regulator. Then IPO frauds 2013 to 14, various sham IPO came, and there's more in SME market, manipulating of accounts, diversion of IPO proceedings, conversion of unaccounted money into legitimate market gain, price volume rigging, dumping of inflated shares, and then investor lost money as well as confidence in primary market that has taken in IPO fraud in 13-14 in various companies. Then PACL India Limited, that is also Ponzi scheme type of thing, where they were having a plantation scheme, and they have collected lots of money in Punjab and this various other places where low people have more income but low knowledge, education. They gave the assured return of 40%, 30%, and then they're giving the commission to the various agents, and they have siphoned the money. So SEBI has collected, collectively, the investor has lost 49,000 crore rupees, and SEBI has come out heavily on these schemes, and they have restricted them. Then synchronized and reversal trade on FMO segment 2007 and 14-15, that has taken place, where people are doing synchronized trading, non-genuine trading, price rigging they are doing, and various illegitimate method they are doing. And by doing this, they are using as a stock market platform to tax evasion for manipulating book. Revenue loss to large scale tax evasion has occurred, and market largely was compromised. Then LTGC and penny stock, that also they have done the same way, that is small and more or less it has taken place in SME market, and then they have created a wrong impression in the market. 10 rupees share reached to 100, 400, 500 rupees, and then people got the advantage of a long-term capital gain, and then it has taken place. It was a revenue loss and tax loss, and market integrity was compromised. Then mass insider trading, so many insider trading cases has taken place. Famous case was this WhatsApp group, where they were giving information to the various people, and they were circulating this, and they were distributing price sensitive information of various companies and doing this, and then do the insider trading and market manipulation. The most important impact was the price discovery was distorted by fraud, and investor was cheated by secondary market. Then co-location scam of 2018 has taken place, where people have taken advantage of their knowledge with the top people, and they have done the best trading, because in the online trading, who can do the fast trading, that is the important thing, and who can do that trading if his system is faster. So everybody is trying to get the fastest system, and then co-location was the impact, and then some people got the benefited, and SEBI has busted that particular coalition scam, and that is also creating an illegal cartel and loss of opportunity for other brokers and investors. Unauthorized trading in 2019, that is a Karvy stock broking thing, which is misusing client fund, unauthorized trading. It is also investor loss, and so many people have not recovered their money. Still, they are struggling. Modex is one of the example. Then, what is the impact of these frauds? The impact of these fraud is loss of public money, because it's a crime against public at large. Because people think, if I'm doing some small cheating, what is the impact? But this is not correct. Loss of public money, loss of investor confidence, and then these investors do not return to the market, and then market is not in a position to develop equity cult. That is the most important thing. And overall economy is lost, because economy cannot be depending upon only on the loan. Economy can depend upon the equity, and that is also very important thing. If the equity is disturbed, then you cannot depend upon the debt. Investor perception of market get hurt, because they see it's a speculative and gambling, and once somebody is burning their finger, they will not come back. Revenue loss, stock market misused to tool for tax evasion, revenue is also losing. And temptation of fraud increase. If he can, why I can't? If it is not, stop this. Reforms in law on account of fraud has taken place. SEBI got statutory recognition when Harshad Mehta scam was there, and it came into picture, and SEBI got the teeth. Rules of trading change. We have seen T plus 45 days. Now it's a T plus 2, 1. It is happening. Ring trading replaced with the system driven, because ring was manipulating. Physical share replaced with the digital share. You can do any trading. Settlement mechanism was made easier and faceless. So you can't interfere. Otherwise, earlier the brokering community in the stock exchange were manipulating for their own benefit. Corporate governance become part of the law. A state-of-art civil surveillance system has deployed by SEBI. Regulatory trust on disclosure reporting by companies and monitoring has changed. Law introduced for hammering down Ponzi and fly night scheme, and code of conduct for market intermediaries has changed. Rules of issuance of security rationalized for prevent of fraud. So tough law to prevent and prohibit insider trading. It has come. Now it's a penalty in insider trading of 25 crore and 3 times of the unlawful gain. That is restriction they have put in. More power to SEBI to investigate and order of disgorgement bar from securities market, and even arrest power has gone. So this is the reforms has taken place in the market. Now the point is, law blocks road for fraud and greed builds tunnel. So in Hindi there is a saying, तू शेर में सबा शेर. तो सेबी कहीं कुछ बनाती है और वो लोग something, they build something new. So another thing, to dal mein paat. So that is also the same way. The law blocks road for fraud and greed builds tunnel. That is one part. But the most important message is this: rather fail with honor than succeed by fraud. That is the concept we should do, because we can honor with grace, we can fail. But by succeeding fraud and doing something which is against the system will bring lots of discredit to you, lots of losses to you. So this is the point which I want to give. I will request Mr. Sundareshan that he can tell us that what his experience, how they have done this, how they are protecting the market, what are the issues they want to give the message to the market that people should avoid manipulation. So over to you, Sundareshan sir, to tell us and give your experience and studies. Sorry. Please unmute, sir. Yeah, your presentation is visible.
Thank you, Mr. Pavan Kumar Vijay. And I compliment corporate professionals for doing this type of seminar during this COVID-19 time, which is a very testing time for all of us. We are not able to meet and we are not able to discuss many things, but you are taking a very good initiative of bringing people together by hosting this type of seminars, almost twice a month. And I'm glad to know that you have done so far 20 programs. and I'm sure you will take it further, forward with much more programs. And I thank you for giving me this opportunity to share some of my thoughts on this subject. Um, the first thing is coming down. So first, I would like to put a disclaimer that whatever views I am expressing in this are my personal views. My employer may or may not subscribe to the views of expressed during this session, and the facts, figures quoted during the session are all available in public domain. I have only taken the attempt of compiling and presenting them in a capsule form for the ease of understanding. Now, the agenda for today's session is that why the frauds takes place and what are the types of frauds. Of course, Mr. Pavan Vijay has covered some of them. I would like to put it in a different perspective and what are the elements involved in committing a fraud. And as Mr. Pavan pointed out, I would like to cover 3 cases where SEBI has taken some action in the last 6 months or so. And also the latest measures SEBI has taken to prevent and minimize frauds. As Mr. Pavan pointed out, we have been taking measures on an ongoing basis, but I would like to point out some of the recent measures. Now, why securities market frauds takes place? See, these types of frauds are not unique to Indian securities market. The first thing we have to understand is that in any market, when there are multiple players, there is always bound to be, one trying to win over the other person, either by hook or by crook. Because as the desire is to, especially in the securities market, the desire is to gain more and more. So the first thing is, as Mr. Pavan also pointed out, is the human greed. Because in a market where making money is the sole objective, in one of the recent cases of where Supreme Court has also made the observation that no one comes to the securities market with an intent to incur loss. The intent of any person coming to play a particular role in the securities market is only to make a gain. Now, when you want to make a gain, do you want to make it in the shortcut or do you want to make it in the normal course? When you are not able to make it in the normal course, and when you feel that somebody else is making money in the market, the people become more and more jealous of that. So what they do is they try to understand some ways of means of doing and earning money. And over a period of time, okay, if this is the way I can make money, then they start expecting more and more. So when the need becomes greed, you are forced to get into means which are not acceptable or recognized or what which is acceptable to the society. And therefore, greed is the main reason why a human tends to fall on the wrong side of law and commits fraud. The next is that it is a human nature to be ingenuine and then look for loopholes in the system. Whatever the regulatory framework is put in place, whatever the technological advancement which is being brought out, the human being always thinks that can I jump the queue and try to do something more? The best example is that some of you might have read in the newspaper which appeared in yesterday that there is a very well educated person, I can name it, from IIT Kharagpur. He has used this knowledge to make a parallel app for the Indian railway reservation system. And he has actually done reservation running into crores and crores of rupees, and he has duped the railways. This is the report which appeared in the media in yesterday's newspaper, which means that we all know that how the railway reservation system has been working, and we all have benefited by that online booking. So much of time saved, so much of comfort we have enjoyed. But even in that, which is a public utility service, someone who is such a qualified person from such a reputed institute has tried to use his knowledge for this type of purpose to make a parallel app and then create public loss. So if this is basically one of the main reasons that the human ingenuity tries to travel beyond the realm of honesty. So when someone wants to use his knowledge, someone wants to demonstrate his expertise, he does it in the wrong way. So this is another reason why the frauds take place. Then the third is, of course, as Mr. Pavan pointed out, declining social and moral values. So especially when people who are having less experience in the system, they try to think that that how short we can make money, how faster we can become rich, because people are very impatient. No one wants to wait to get a cooked food. Everybody wants to order from a ready-made food, and no one has the patience today. So what happens is that, and then also when somebody is better off than us, how that person has can I earn? Why not I? Because of that, people tend to cross the line and try to what is right and what is wrong. They are not able to decide, and in the habit of moving from need to greed, they come down in their moral values and then commit the fraud. Now, there is a American sociologist and a criminologist, Mr. Donald Cressy. He puts how a fraud in a particular triangular form. What are the three ingredients which actually creates that type of sensation in a human being to commit a fraud? The first one is pressure. That is the motivation or the incentive to commit fraud. So the person is under pressure in the sense that whether he is having a financial stress or he is having some outstanding liability to make up. It may be a medical bill, it may be a housing loan, it may be a somebody in the family to be wedding to be conducted. That could be some sort of a financial need which he is not able to meet from his regular means of earning. So what he has to do, he has under pressure to earn somehow to meet that particular expenditure. Therefore, he is tempted to commit the fraud. The other way is that the pressure is that expensive lifestyle or addiction. As I said, somebody wears a high value jewelry or somebody wears a high value shooting, then immediately this person thinks that why not I also emulate that person. So basically it is like a demonstration effect. So I also wants to do what my neighbor does. So and if your present means are not sufficient to meet that, you will be tempted under pressure to commit a fraud. The second one is that opportunity. So when a person sees that certain rules are lax, or somebody puts a lot of trust or authority in another person, he tries to misuse that. If you see some of the criminal frauds also, like rape and other things in the recent survey, if you see, the relatives of the person is only most of the time committing such type of misdemeanor. So here also, when I put some trust on somebody, I give him that authority to say operate my account, or I give a power of attorney to other person. What he does, he understands my ignorance or he understands my weakness, and he make use of that opportunity to commit a fraud. Similarly, the lax control or the deduction. The person finds that one day he killed some amount, and if the person is not caught, he thinks that I have found a way to loophole to commit a fraud, and therefore I can continue to carry on with that. So this is whenever a person sees an opportunity to commit a fraud and gets away in the first instant, he tries to continue with the same. Now the third one is, of course, which is becoming of late, rationalization. People justify their actions. This is where our social and moral values are actually coming down. People have started telling that what is wrong if I earn money in the wrong way? Because as Mr. Pavan pointed out in the last slide, are you concerned about your honor? Are you concerned about your credibility? Now today, somehow the thing is that no, I am not concerned with all that. I am concerned only with my ability to earn money and become rich as fast as possible. So one of the reasons under rationalization is cognitive dissonance, which means there is a behavioral attitude on a person that why shouldn't I do the crime? Why shouldn't I do go for the misconduct? The temptation is in the person's gene itself to do some type of fraud and to demonstrate that no, see, I can also do this type of thing. Similarly, if the management in a company is not honest, the employee thinks that when my boss is doing that, why not I do that? So he tries to justify the wrongdoing of himself. And of course, the third one is that you do a particular action and you incur a loss. Now you think that if I want to cover up that loss, the best way is I have to do something right or wrong. Somehow I have to cover up that loss. And therefore I try to indulge in a bad behavior which results in committing a fraud. So this triangle, a person who actually is trying to commit a fraud gets involved in one of these things and then encourages himself and justifies why he should not commit a fraud. Now, moving on to the types of frauds in securities market, Mr. Pavan has already explained. I have just put it in a different form that we find that from the regulator's perspective, some of the manipulation is done because of trading which takes place in the stock exchange. The second one, by giving wrong information to the people who are going to rely upon that information. And the third, misstatement in the financial statements or misrepresentation in the financial documents which is submitted. So in these type of broad three parameters, the people who are supposed to give the right information to the system, they somehow mislead the public at large and then induce them to trade in the market, and in the process either they gain or they make the public at large to lose, which creates, instead of creating trust in the system, actually all these things breaks the trust in the system. So the market frauds basically leads to loss of faith and loss of trust. Now, these are all the very familiar schemes of fraud which is being committed. Now, few more types are like, which were happening before, but now to some extent they have been, contained because of technology, because of awareness for the investors and other measures taken by SEBI. So these are all like forged share certificates, mis-selling, which is quite common in any product. When the person who is selling the product knows that the buyer, though is buyer beware is the norm, but the buyer is not is ignorant. He tries to sell the product by giving wrong promises and induces that person to buy something, and in the process commits a fraud on that person. Of course, we all know trading taking place outside the exchange with with the people who are not registered, and then people mobilizing money by giving a lot of promises. I think number of cases Mr. Pavan has highlighted, so I don't want to spend much time on all this. Now, what happens in all these types of frauds? What is the ultimate thing which happens? First of all, one way is that misrepresentation. That means some facts which are supposed to be known to the person, he is supposed having an obligation to disclose, but he basically conceals it. He conceals that information and takes advantage of that and then commits a fraud. Or second is in the form of a mis-selling, that is by telling facts which are actually not true. So while communication of that facts, he knows that he is actually lying, but he takes advantage of the ignorance of the other side of the public and then gives suggestions and misleads that person. Then active concealment, that is, I know that what I am speaking is not true, but knowingly I cheat the other person. Like that, it goes on. Like you make a false promise, knowing well that you have no intention to honor it. And similarly, deceptive behavior. You do not allow the person to take an informed decision. Although the person is inquisitive, he keeps on asking questions to you. But what you do, you don't give him right answers. You actually, misguide him and ultimately deceive the person. So these are all some of the elements which are involved in the fraud. And since the type of fraud, what are the types of frauds and how many frauds have taken place in the last, since 1990, that is almost 30 years, Mr. Pavan Kumar has conveyed all those things in detail. Therefore, I think we should move on to the next, which is about the case study. So what I'm going to do is that, as you know, SEBI has been, having its own systems to find out and also take action for the different types of misconducts in the market and the manipulations being done. So I have chosen three cases where in which the orders have already been passed by SEBI, which are in the public domain. So the first case which I want to do is of an insider trading. I think most of us, when we talk about securities market, people say that the market is full of insider trading. People have, the information which public information which is not available to general public, but somebody possesses this unpublished price sensitive information and they make use of that. Now, predominantly, it cannot be said that the market is full of such things. But yes, at times some people engage in such type of misconduct, and our job is to find them and also punish them. Now, this is one case where a company which was not doing well, apparently, presently the company is under liquidation. So 3 years back, when the company had some financial difficulties, the financial results were announced for the quarter ended September in the month of November. So they have taken advantage of this gap between September and November and used that UPSI for the purpose of their own trading. So the promoters of the company, while in possession of UPSI, they traded, in the sense, since it is a financial result, we all know that the price was supposed to have fallen once it is disclosed. So they first sold their shares, and accordingly, when the price had fallen, they have actually avoided loss in that. And with the result, they have violated the provisions of SEBI insider trading regulations. Now, how this case was found out and what type of action SEBI has taken, we will see now. Now, see the shareholding pattern of the promoters at the end of September 2017 and at the end of quarter 2007, December 2017 was like this. The promoters had 60% there, but by December, it has come down to 39%. Say 39.22, we can take it for easy understanding, 40%. So effectively, 20% of the shares they've already sold between September and December. So why did they sell? Because the financial results of the company between June and September, there was a huge, what you call drop in the profits of the company. Rather, the losses increased substantially from 6 crores to 166 crores. So when the September results were finalized, the promoters of the company or the managing director of the company or the key management personnel in the company, they knew that the company's financials are not good. They are not performing very well, and there is going to be a likely, steep loss in the company, which is going to be disclosed. As we all know, for the September quarter 2017, the accounts will be finalized sometime in October or November. We have as per the LODR requirement, we have to disclose the quarterly results within 45 days. So they have time up to November 15 to disclose these results. So what they have done is between October and November, that is before the UPSI was made known to the public at large, they sold 20% of their shares. Now, what happened to the price and volume of the scrip when the actual disclosure was made on November 29 to the stock exchange? If you see, the price had fallen by almost 6% on November 30th because the disclosure was made to the stock exchange regarding the results for the quarter ended September 2017 on November 29th after the trading hours. So the investors who are regularly trading in the market would have had the opportunity to take an assessment of this company's financial position based on this information and trade on 30th. Therefore, the closing price as on 30th was in NSE was 20 rupees and 20 paisa, and the volume had also increased substantially on November 30th. Now, what did these people do, taking advantage of this low financial results for the quarter ended June? So here, the people who have actually taken advantage are the CMD of the company and two of his daughters who are working in the company as vice president. So these three people, they knew that the company's financial performance to be declared is going to be very poor, and therefore they took advantage of this information, and being occupying the responsible positions and the senior management position, they are considered as insiders. So what did they do? They traded during this period of UPSI, and the very interesting thing is when he knows that the person who is actually doing this insider trading, in order to misguide the market as well as the regulator, not only sold the shares but also pretending to have bought the shares. Because one difference which the person will take is when the company's performance is going to be bad, if I had a wrong intention of cheating the people and making money out of fraudulent activity, why will I buy the shares? Therefore, in order to give a wrong signal to the system, he had also purchased the shares. But if you see in the slide, net sales was done by the MD to the extent of 31 lakh shares, by the two daughters of 1,14,440 shares each. So these shares they have sold at the average price of 24.36 per share during the period October and November, before the financial results were actually disclosed to the stock exchange. So in the process, what they did, they earned a loss of close to 138 lakhs. That is 1 crore 38 lakhs. They have actually avoided the loss. The basis is that if they had, since they have sold at the average price of 24.36 rupees, and the price which provided in the market after the disclosure of the financial result, which was 20.20, the difference is considered as the notional loss avoided by them, and which is calculated to the extent of 1 crore 38 lakhs. So since it was the managing director and the two daughters, when SEBI confronted them, they confided that they were aware of the poor health of the company, and they know that the company is going to get into trouble, and there was a particular item pertaining to what you call sales revenue, which was originally projected as receivable, and subsequently they know that it is not going to be receivable, and therefore they have to write off that amount. And that is why suddenly the loss increased from 6 crores to 166 crores. And therefore, what is the action SEBI took? SEBI impounded the unlawful notional loss and also frozen the bank accounts of these people, and directed them to show cause why the violators cannot be debarred and the impounded money cannot be discharged from them. I have also given the link for this order. Those who are interested can go and read the full facts of this case and understand that how the modus operandi has been done, and it will be available in much more detail. Now we move on to the case number 2. This is another type of manipulation where the books of accounts are being fudged. I think it is similar to the Satyam type of case. As Mr. Pavan pointed out, this Satyam episode happened almost 12 to 13 years back, and then subsequently the Companies Act was amended mainly to address these type of situations. But unfortunately, even after such amendments, people are still, having the courage and having the sort of, expertise to carry out this type of fraud. So this is very interesting to know that, it is a housing finance company. It has actually raised about more than 24,000 crore of debt through the public issue. And, there was a news item about almost 2 years back that the promoters have siphoned off to the extent of 31,000 crores. But then the company actually issued a press release denying that and telling that no, everything is fine. Corporate governance is very good. Company enjoys a AAA rating for all its debt instruments, and all those claims were made by the company. But unfortunately, when those claims were made in January, but in less than 12 months, that is in November 2019, RBI filed an application to initiate corporate insolvency, and accordingly, a resolution professional was appointed under the IBC. Then the resolution professional appointed a transaction auditor to audit the books of the company to understand whether the company has done any mischief. Now, you will see the findings of the transaction auditor, which is like this. The findings of the auditor were disclosed to the stock exchange by the company. Now it is similar to Satyam type of case. What the company has reportedly done is that in their enterprise resource planning software, they have actually created a logical partition and then maintained a parallel set of books in respect of one particular branch. So in that branch, what they have done is they have actually given loans to about 91 entities, but in the official records, it was shown as 2,60,315 loan accounts. That means these 91 entities have received the funds, but for the purpose of public, it was shown that they have lent money to more than 2 lakh people. Then these 91 entities, basically what they have done is most of them, whatever money which was received by them from the company were reinvested in most of the companies belonging to the promoters of this listed company. So effectively, what the promoters have done is, instead of taking the money directly from the listed company, they showed as if this money have been dispersed in the form of housing loans and subsequently taken the money from those accounts into their personal accounts. And now, subsequently, when this auditor found out that these 91 borrowers who have taken money from this company, basically they have no operations, they don't have any financial strength, and they are very unlikely to repay the loan to the company. So effectively, the money which they have taken from the company and given back to the promoters of the company are most likely not going to come back to the company. Now, what is the effect of this type of window dressing the books of accounts? Now, what happened is that, as I said, the 91 borrowers are not going to repay to the company. So that is the first finding, because of their financial strength, because the companies do not have any assets and they have actually not used the money for any purpose. When a person borrows the money, he is expected to put into use for a specific purpose, earn something out of that, and then out of what he earns the proceeds, he is supposed to repay the loan. But here what has reportedly happened is the money received was simply diverted to the promoters, and what they have done, I will tell you after some time, that you will come to know. Now, so what is the amount outstanding from these 91 entities is to the extent of 14,000 crores. And then because of these entities have been given loans at a concessional rate, there is loss of rupees 3,348 crore to the listed company, because since these 91 entities are apparently known to the promoters, apparently related to the promoters, they have purposefully reportedly given loans at a very cheaper rate as compared to the normal rate of interest which the listed company was charging from others. And in the result, what happened? Their income has been shown less from these companies, and the loss is to the extent of 3,300 crores. Now, because of this, effectively the principal loss of 14,000 crores, which is very unlikely to come to the company, back to the company, but these were shown as receivables and it was shown in the financial statements of the listed company quarter after quarter, year after year for more than 10 years. And if you factor these figures into the balance sheet and the profit and loss account of this company, the company is expected notionally to have incurred losses instead of huge profits they have disclosed to the market. So basically, it is having multiple elements of fraud. It is number one, concealment of the right information. Number two, projecting a wrong information, knowing well that the information which is being published to the public knowledge is actually wrong. And also, what they have done, they have also taken the money from the company for their personal use. Now, therefore, what is the authenticity and the reliability of the financial statements of the company for the 10 years period are absolutely doubtful, and therefore the true and fair which is being used while giving a certificate to the audited accounts of the company basically or is actually questionable, because they are factually untrue and also not at all fair. Now, because of all these events, what happened to the market price of this script? See, the years, if you see, I'm showing from 2015 to 2020, the market price has been continuously increasing from the year 2015. Had they disclosed these facts in 2015, probably this increase would not have happened. And sometime in 2018, till the January 19 disclosure was made by some sort of a complainant, the price was close close to 600 plus and touching about 700 rupees per share. And in January 19, suddenly, if you see the price fell after the disclosure of this information that the company is involved in some fraud and the promoters have reportedly siphoned off 31,000 crores. Now, what has happened because of that? Now, the latest finding, which is available in the media in April 20, 2020, there is a report which is available in a couple of newspapers. The Enforcement Directorate says these monies which have been diverted or siphoned off from the listed company using these shell companies by the promoter, they have actually bought flats in Melbourne, they have bought flats in New York, they are owning hotels in Thailand, they are having flats in Bombay, they are having different types of buildings in their name, but all these things have been kept in the name of their family or friends or not close relatives. So indirectly, the money which has been siphoned off from the listed company have been enjoyed or stashed away in the names of the promoters and their friends and relatives. So this is what the audit report throws to the public, and therefore SEBI has to take action against them. And accordingly, SEBI on September 22, 2020 passed an order debarring the promoters from the securities market. They have restrained from associating with any listed company as directors and promoters. Now, the details of this order is also available on the SEBI website, and I've also given the link. So we thought that once the Satyam episode is over, people may not do that type of manipulation of books of accounts to this extent. But this case reveals that the fraudsters continue to devise different mechanisms. The fraudsters continue to flourish, and they find multiple ways. Very interestingly, to understand this issue, if somebody has to play with the ERP system, how many people will be involved in manipulating this? It is very surprising that how the promoters, assuming that this has happened, because this is a finding of the auditor, probably the promoters or the concerned people who are being charged by the various agencies will be having their own claims and counterclaims. But assuming that this has happened, it is really surprising that in today's technological advancement, how the internal auditors failed to notice this, how the statutory auditors failed to notice this, how year after year a company or the promoters or the key management personnel can manipulate one set of books for the purpose of disclosure to the public, another set of actual books for their personal purpose. It's very surprising. But this shows that the ingenuity is very high, and people can go to any extent, even in today's situation where we all think many things are moved to digital, and therefore fraudulent activities might be coming down. But unfortunately, as I said, because of the human greed, because as today's one article very nicely says about these people only, there is a specific reference to them in today's Business Standard. When I happen to read, it says, when people try to grow too fast, too big, this is the effect. When you try to become too big, too fast, then this is what is going to happen. Okay, so now moving on to another type of fraud, which is taking place in the securities market. This is called front running. Now, what happens in a front running? So there is a big client who places an order with the broker. What we mean by a big client is any person who is basically placing a very big order. Say, for example, today, the price of the scrip is quoting 2,000 rupees. And if somebody wants to buy 1 lakh shares of that, the value is so high. So that particular order who is placing is called a big client. Generally, we consider big clients as institutions like FPIs or the mutual funds or the alternate investment funds, or sometimes even the treasury operations of a very big institution. So the big client first places an order with the broker. So when the broker comes to know that the big client is going to say, let us take a buy transaction. So the big client receives the communication from the big client. So the broker receives the communication of the big client's order. Then what he does is, instead of executing the order which has been received from the big client, he actually buys almost similar quantity of that. So a big client wants to buy, say, 1 lakh shares of company X. The broker buys in his own account or some of his friends' account 1 lakh shares of that particular script. Then, after execution of that, he places the, because of such a huge order is placed, that we all know that the price will fluctuate, and if it is a buy order, the price goes up subsequently because the market comes to know that a big client is buying, therefore the price goes up. Because the demand is more, the price goes up. The same way, if the big client is planning to sell and the broker executes his own order first, the price fluctuates and the price will come down because supply is going to be more, and therefore the price comes down. We all understand that. Now, because of this, after the price fluctuation, the broker executes the big client's order. So if you take the buy transaction, so the broker first buys from the market and allows the price to fluctuate, and then places the order for the big client. The moment the big client's order is placed, within a fraction of seconds, if you see the timing of the order, timing of the transactions given in the order, you will understand it is not even, it is much less than a second. So that what he does, he places the reverse order of his original order. That means the broker, what he bought 1 lakh shares, immediately he sells 1 lakh shares. And then what happens? The broker's reverse order actually matches with the big client's buy order. So what we call this is that buy, sell. That means when the big client places a buy order, the broker first buys the shares. Then after the price fluctuation happens, he places the buy order for the big client and then reverses his original order and ensures that his reversal of his original order matches with the buy order of the big client. And in the process, whatever is the difference of his original buy order and the sell order, he makes profit. Now, this is when a person comes to know that a big client is regularly coming to him, he can take advantage of that non-public information and keeps on doing it. Now, as Mr. Pavan pointed out, one of the HDFC cases, one of the dealer was doing it about 10 years back. Then, as most of us will be aware, SEBI brought the rule that whenever a dealer is working in a particular institution, he has to be kept away from other telephones. He is not supposed to communicate any information with the others during the trading hours, and a lot of restrictions have been brought in. But then, even after that, people are, even today, how people are doing, we are going to see in the next few slides. Now, SEBI came to know that this type of transactions are still going on. So what we did was, we found a particular transaction which we have called front running through mule accounts. Now, what is a mule account? As though there is no specific definition for mule accounts, but one of the circulars of Reserve Bank of India says that what to understand for a layman is that basically a type of name lenders. The accounts are opened in the name of a person who actually exists, but he does not know how the accounts are operated. He only lends his name and his documents to open the account, and somebody actually controls that account. He operates the account, he deposits money in that, he withdraws the money in that, and the real person does not even know that his account is being used for transacting in lakhs of rupees or in crores of rupees. Then suddenly what happens, when a particular suspicion comes on this operation of the account and some queries are raised, suddenly the person who is operating the account closes the account, and then he vanishes from the scene. So when the regulators find out whose account it is, and when we actually go after that original account holder, we actually come to realize that that person is from a very poor background. He is a cobbler, he is a driver, or he is working in a particular house as a maid, and therefore it is actually difficult to find out who operated this account. So this is basically the concept of mule account. Using that, how a securities market fraud was committed and how SEBI detected it about 2 months back, I'm going to show in the next 5 minutes. Now, how did SEBI come to know that? As Mr. Pavan told in his address, that SEBI has been developing lot of sophisticated systems, and today we have very efficient surveillance system, and we also have efficient people to monitor that, efficient people to go through the alerts which are generated from that, and then understand that, and then also take cognizance of that and all those things. So we have the physical infrastructure as well as the human infrastructure as well as the intellectual infrastructure today. Therefore, with that excellent infrastructure, the alerts generated from the system throughout that there is some sort of a suspicious transaction taking place. What type of transaction? We found that there was a big client order coming, and whenever that person's order is getting executed, the counterparty happens to be very few people. So we suspected that how when a big client's order is getting executed, whether it is buy or sell, the same person could become the counterparty. So that is the first doubt we had. And since the number of transactions and the value of transactions were more, then we started looking into who are the counterparties to these big client orders. Then we found that from the trading account and the bank account, what we found was that disclosures made by this trading account holder and the KYC form, that is what is his income and what type of trading pattern is being we found out, it was absolutely disproportionate. And second is, in the trading account, prior to this type of transactions, there was no trading at all. The trading account was effectively dormant. But suddenly, if you see in a span of 4 to 5 months, which actually happened between December and August, so in the span of about 9 months, these front-running accounts had transactions worth to crores and crores. Prior to that, either it was dormant or very, very minuscule transactions were taking place. Then what we found, the fourth one was, as I pointed out, the same people's transactions was getting matched with the big client's order. So we found that means there is something more happening in this type of transactions. Therefore, we took up this case for further examination. Then what happened in this? How the big picture came out finally. So there is, as I said in the front-running concept, there is a big client, and therefore the big client gives the order to a broker. So the dealer in the broking firm, he basically comes to know this non-public information from the big client. That is, we call it as IC1 because he is called information carrier. He carries this information of the non-public information. Then what he does, either there are two ways of doing this front running. Either he can do by himself. As I said, he can open accounts in his own name, or he can use somebody's account, or he can pass on this information to a third person who can do the transaction. But as people know that because of this common PAN number, mobile number, and other things, generally people do not do in their own name. So they have gone to the next step of hiring certain people or certain accounts. That is where we call as mule accounts to operate that. But in this case, he has also engaged another person. That is, we call as information carrier 2. That is, he passed on the non-public information to this person also. So effectively, these two people managed totally 4 accounts for the purpose of trading, for the purpose of withdrawing money from those accounts. So effectively, there are 6 players in this game. This is not, I don't want to call it is a scam game because it is not such a big one, but the modus operandi is as good as a scam because the information carrier, what he does, he has 2 accounts for the purpose of trading as well as for the purpose of bank account. Similarly, he passes on the information to another person who is called information carrier 2, and he happens to operate 2 accounts, and therefore 4 accounts were used for the purpose of front-running the transactions and making money out of it. Now, here only very interesting to know how did SEBI crack. That is a very interesting to know. Now, what we did was we took four types of basic information. That is the bank statement analysis we did, and also the know your client forms, which is available with the broker as well as from the bank, and also the call data records that taking place between these, the information carrier one and information carrier two, and also how the money was withdrawn from these accounts. Here only you will find interesting finding from SEBI's so-called examination. From the bank accounts, what we found was basically when the bank account originally to start these operations, cash was deposited. So as I said, that is how we suspected that it is a mule account. So somebody's name has been given, documents have been given, the accounts are being opened. And once the account is opened, that checkbook, that debit card, everything has been in the control of another person. So what he does, the transaction, he places the order for transacting, and whatever the money profits comes into that account, he will the money goes into that account. And since this operator is having the debit card of the original account holder, he himself goes to the ATM and withdraws the money. And that is what we found. And what we found was, because of this COVID situation, we all know that people are not going to the banks, and most of the cash has been most of the money has been withdrawn in the form of cash. That is where we had a doubt how so many transactions are taking place, who is the person who is operating the account. Similarly, when we saw the KYC, know your client analysis, the address where the account holders are located are not very prominent places. They are not, very, very big places. We can, for the purpose of, this discussion, we can say they are from slum areas, but that trading is running into crores of rupees. Therefore, the location of the person and his trading activity was absolutely disproportionate. And second thing, very interestingly, if you see the bank account, the one of the front runner has also received the rupees 1,000, which was dispersed by the Honorable Prime Minister from that Prime Minister's care fund because of this COVID. That means this person is so poor, he receives money from the Prime Minister's care fund, but he is able to trade in the stock market to the extent of crores of rupees. So this is another suspicion we had. Then we went into seeing the call data records. Because as you know, the regulator, though we may not have the power to interfere in the transcript of the conversation, at least we can find out how many times a person has made the calls, to which number and what time, and where the person was located. All that we can find out with the help of the telecom service providers. So when we found out, we realized that the conversation taking place between the information carrier, that is the first person who is the dealer in the broker, and the second person to whom he was communicating this non-public information, the number of calls were made were so substantial as compared to the number of calls he made to even his own spouse. That was the biggest suspicion we had. Why did these two people go on talking on a daily basis, whereas the number of calls these people make to the respective spouses were substantially low? This is another suspicion we had. Then we also found out one more thing was that the number which they have registered with the broker, because as we all know, for the purpose of trading, every investor has to give you a particular mobile number for the purpose of sending the trading details and all. But the number used for these conversations were different from the mobile numbers which was given for the purpose of broking purpose. So that means there was a need for these people to use a non-public mobile number, because they were doing something which was not appropriate. They have to use their personal phones for carrying out this type of information. Now, this is from the documents available to us. Now, here only I want to compliment, of course, my team and the other people in the system who actually cooperated with SEBI in cracking the case. So we found out how the money is getting withdrawn from the basic accounts. As I told you, the banks were not, entertaining customers because of this COVID time about a few months back. Of course, now people are moving and things are easing out. It is good for us. So what these people were doing, they were using the debit card of the account holders and withdrawing from different ATMs. So we went to the extent of checking from which ATMs they were withdrawing the money. As we all know, if we have an account, either we withdraw money from the account which is closer to our home or closer to our office. But in this case, what happened when it come to the information carrier one, who is the dealer of the broker, when he operated those two mule accounts, he was withdrawing from the ATM which is closer to his house. That is, his case in Karvy. So he withdrew money from the ATM which is closer to his house, which is about 500 meters from the house, which we found out from the Google map. And also he uses the debit card of his own account as well as the debit card of the mule account holders from the ATM which is closer to his office. So our suspicion becomes stronger that the accounts are not operated by the actual owners, but by somebody who is actually doing this type of mischief. Now, coming to the group 2, that is the information carrier 2, actually he is the person who has introduced the bank accounts of the other two accounts. So probably they could be his own relatives or it may be known to them. So he only introduced the trading account as well as the bank account, and he was having control over those accounts. He had the debit card of those two accounts, and he also, although the accounts were opened somewhere in Gujarat in the place called Modex, this gentleman's case in Bombay, so he has been withdrawing money from the ATM which is close to his account as well as from the ATM in Gujarat, because he has been frequently traveling during this COVID time. That was another suspicion for us. And therefore, what we did was, when he was, maybe to our luck, when he was withdrawing from the ATM on a particular day, we got a phone call from somebody else. Then we checked from the tower also that whether this is the same person from where he is operating. And we came to know that the same person is using the debit card of somebody to withdraw the money from the same place. This is how the place, that is the location, the ATM, and the account from which the card has been used, everything has been synchronized, and accordingly they were found to have committing this fraud. So these are some of the ATM pictures we got, which have also been written in detail in the SEBI order, that we also checked whether this, because of this COVID time, the people were using the mask, but we tried to, do some sort of a study to understand whether the face expressions are looking similar, and we found that they are almost similar. This is some of the pictures. So this is the technology to that extent SEBI is using now to catch the fraudsters. So this is some of the ATM pictures we got to establish that who is the person who is entering the ATM. And in one particular instant, very surprisingly, the person was using 4 different debit cards, withdrawing from the ATM one after the other. And when we found that out of these 4, one was belonging to his own account, and the remaining three were belonging to 3 different accounts. Out of the remaining 3, 2 were belonging to these mule accounts, which were used for front-running the activities. So this is exactly the evidence we collected, and accordingly we took action on them. So what is the peculiarity where we were so sure that this person was committing the fraud was that whatever profits they were making in these transactions were only from the front-run transactions. If they have also done some transactions without knowing who is the big client, in those transactions, they have not made a profit, or in fact, sometimes they have incurred loss. But whatever profits they have earned from trading was only from the front-running activities, because they knew that there is a opposite buyer or seller, and accordingly they were able to make money out of it. And second, that transaction also most of the days were only when the big client was trading. On other days, they were actually silent, or they were dormant, or they were not doing much volume on those days. So they also entered the market only in a particular script, only on a particular day when the big client also trades. So these are the similarities which we found in the transaction details, and accordingly we felt that they were committing a fraud on the investors. So what did SEBI do? This is the very latest order. October 1st we have passed. We impounded the unlawful gain. We have frozen the bank accounts of all these people. We have debarred them from the market, and also we have directed them to cease and desist. And the order is also available on SEBI website. Now, when these types of frauds take place, what happens in this system is that, as Mr. Pavan also pointed out, there is completely lack of trust and loss of faith. Once we lose the trust as well as the faith, the integrity gets affected. It becomes very difficult to rebuild that. And therefore, what will happen is that the entire market becomes like this, which is a very familiar thing for us few months back. But because of COVID, less traffic, we are all traveling comfortably wherever we are. But securities market, if it becomes like this, it will be very, very difficult to bring back the confidence of the investors. And therefore, SEBI has been trying time and again to take measures to prevent frauds, if not possible to prevent it, at least minimize them. Now, let me just touch upon some of the latest measures we have taken for the purpose of minimizing the frauds. As Mr. Pavan said, disclosure and transparency is the hallmark. We have to improve the corporate governance. We have made so many disclosures to do, especially to address this insider trading and passing of unpublished price-sensitive information and communication thereof. We have introduced this structural database, which the listed companies are expected to maintain in-house, so that we will know whom the communication is shared, as Mr. Pavan pointed out about that WhatsApp type of cases, how the communication goes out of the company, and then how the information gets further shared by the intermediary or by the fiduciary. All these things have to be maintained in a structured database, which cannot be tampered, and all those things. Now here I would just like to quote that sunlight is the best infectant. That is the Justice Louis Brandeis says from US. What it means is that if you are having the natural light, you are supposed to be protected very well, which means if you are transparent, it is expected that the corruption is likely to be less and the frauds are likely to be lower. So transparency is very important. Once you are transparent, there is a possibility that we can check happening these type of frauds. Then moving on to further, as Mr. Pavan pointed out, investor awareness is another thing. We are trying to improve the systems by ensuring that the investors are not taken for like Karvy type of cases. As I pointed out, you might have seen, I don't have to say what type of surveillance systems we have, what type of investigative skills we have developed. We have good type of people. I have already demonstrated that how this case, which was going on from December to August, we could do it in the month of September and bring out the order within less than 1 month's time. So this is also shows the ability for SEBI to catch up when the fraudsters are trying to become smart. We are also equally become smart. And when always the thief tries to become smarter, I want to tell the people who are the audience that SEBI is also becoming smarter, and then we are also not going to leave such people, and they will definitely get caught. We have also come with the whistleblower scheme that is called the Office of Informant Protection. If somebody comes to know that some illegal insider trading is going on, they are free to inform us. Their identity will be protected. They will also be given a reward out of the funds which we are going to disgorge from the illegal transactions. So with all these measures, our intent is that to make the market like this, so that we all can, as we are comfortable in traveling, there must be integrity, there will be confidence in the securities market. Therefore, more investors can come and we all can have better trading platform, and also we can be comfortable in our investments. With this, I would like to thank Mr. Pavan Vijay for giving me this opportunity to share some of my thoughts. Thank you.
Thank you very much, sir. Thank you very much for lucid presentation with so many clarity in thoughts and how you have done this. So to catch all the synchronized people, you have to do so many things synchronized. And that's why you have to catch hold. Sir, I will take few questions because I have received some questions. Friends, you are sending some questions which are relevant to Mr. Sundaresan. I will ask, which is on a macro. Somebody has asked questions relating to very subject and topic wise or section wise, that I'm not taking, that we'll give you separate reply. Mr. Sundareshan, uh, why regulator do postmortem? Because if you do postmortem, that company is out, the things is out, and but you invest money, time, efforts for the postmortem. Why not? We should be proactive. If fraud is stopped at the inception, that investor will also get money, and otherwise what will happen? The fraudster will get money, investor will lose money. So what is your view on this? Please unmute, sir.
Yes. See, as pointed out earlier, SEBI has been taking proactive steps. We have put in place risk management systems. We have made disclosure requirements. See, if somebody, and there is a, audit compulsions are there, all those things are there to prevent. But if the human ingenuity is to bypass all of them, for example, the case I was citing about, creating a partition in the enterprise resource planning of the company. Please tell me how a regulator will be able to find out this. If the ingenuity of the person, that is the management of the company itself, is doing that, without the connivance of the technology provider, the statutory auditors, the accounts in charge, with all those people, if the person does this type of thing, there is no way this type of things can be prevented unless the moral values of the people are standard is improved, governance is improved, and it ultimately comes to the self, for the self to conduct himself. Because these type of frauds can never be eliminated. Let us be honest in admitting that. If somebody creates a partition in his own software and misguides, there is no way it can be avoided. That is why statutory audit is kept. The auditor was supposed to have found out that. We do not know. In Satyam case, still the allegation is going on whether the auditor was part of the promoter's mischief or he was innocent. We don't know. But similarly, in this case also, we will not know whether the auditors were hanging glove or how did happen. So these type of frauds can never be eliminated at all. This is only by improving the moral values we can overcome such frauds.
Sir, what is the role of what is the role of professional in your opinion when you have done so many investigations? What message you want to give to the professionals, chartered accountant, company secretary, advocate, and anybody who is working in the company? What message you want to give?
Sir, I would like to request whoever is the person who has asked this question and also the other audience. I delivered a chief guest address the day before yesterday in the Institute of Company Secretaries, where I have covered this in a very detailed manner. I will just put it in a very simpler form here. See, as far as the regulators are concerned, whether it is government, whether it is a regulator, whether it is a government department, RBI, whatever you call, we are all making policies. So policy making is only rule making. Now, how they get executed at the ground level, that matters. So at the time of execution, the standard of governance has to be very high. So that is where the professionals come into play. So if the professionals follow simply the tick box approach, which is nothing but compliance, that is form and substance. But what is governance is what is unseen and what is unwritten. So someone has to travel beyond the compliance requirements and keep their eyes and ears wide open, so that they are able to, as the earlier query is asked, they are able to identify where the wrongdoings are happening and prompt to the regulator. See, if you see in the recent past, in many companies, the statutory auditors are suddenly resigning, independent directors are suddenly resigning. But what are the reasons given by them? Please take a go to the exchange websites and do one search. Everybody is writing personal reasons. Now, I would like to cite one example. I didn't want to name the company for obvious reasons. Now, it was a liquor company, a very prominent person. The liquor, the group had two or three companies listed on the stock exchange. The very respectable person in the society was an independent director in both the companies. he resigned from one of the companies, telling that his health conditions do not permit him to continue. But the question is, how is health conditions continue? I mean, permit him to continue in the other company in the same group? If this is the reason cited, is it behavior expected from a respected person occupying a credibility in the society? So you have to come openly and tell why are you resigning, and that is why we have come with that system of OIP. I said, that is called whistleblower mechanism. So people can come forward and tell, and they have to be clear in when they are disassociating themselves from any company or any promoter.
Okay. Sir, how effective surveillance system of SEBI versus international system? Are we using AI and machine learning, which you have mentioned in your presentation, or big data? Are we meeting the international competency in this, or we have to do something more on this area? And your information are depending upon from the stock exchange. So are the stock exchange are also comparing and competing in the same manner?
Sir, as we all know, technology becomes redundant in few months. Earlier, it was becoming redundant in few years. So it is not only simply using a machine. Wherever merely using the machine is not going to help in directing anything. We also need to have human intellect to read the alerts which are generated from the system, and then find out from there the pattern, and then accordingly take the matter forward. So as I pointed out, I don't have to tell what type of investigation or examination we have conducted, and how within less than a month's time we are able to crack this type of cases. So that shows that we are upgrading our systems and we are catching up with the international standards. And there is no uniform standard. It varies from country to country, depending upon the geographical requirements, depending upon the trading pattern. There are so many other factors which need to be considered. Therefore, it is, and we are also member of that ISCO. So we have our own responsibility, and we are upgrading our systems. And it is not that we are dependent on stock exchange. It is actually, we are all mutually working together. It is not that we depend on the exchange or exchange depends on us. We are both of us are working together. Even for cracking this case, we took the help of stock exchange in collecting lot of information. We took information from the banks to get the ATM fees and other things. So all the agencies are working together wherever there is a problem to find a solution and take appropriate enforcement action against the fraudsters.
Okay, sir. Sir, one question is, are you awake and we can bite spontaneously? Is it, or do you think you require more teeth in the law in various other things?
See, all frauds or misconduct cannot be corrected only by rule making. Rules cannot correct the behavior of the person beyond a point. So merely rule making or having more powers, more and more powers are not going to solve the problems. It is how the existing rules are implemented, how enforcement is given, how the punishment is meted out, how fast the judiciary functions, so that the fear of non-compliance has to come in the minds of the people. If the people are thinking that I will get away by committing the fraud, I know it will take 20 years in the judiciary to get the final verdict, and by the time I will use multiple means to come out of that, all those things will not solve these issues. Therefore, making rule is not the solution for solving problems. It is the behavior pattern, standard of governance, and ethical values which need to be improved constantly.
Okay. What role you think, sir, for independent directors should play to prevent fraud?
As I said, they are expected to play the role of the watchdog. They have to assist wherever they find that things are not going well, when they are planning to disassociate themselves, they have to raise their objections and they have to bring it out to the public, to the public domain. Either they can inform the regulator, they can inform the concerned authorities, whoever is suppose the statutory auditor is not doing the job properly, they should inform the institute or the NFRA, wherever it is, whoever it is concerned.
Okay, one question is why the fine are so low for various fraud, including insider trading. Recent example shows that fraudster gained 100 crores and he paid petty amount of 1.4 crore.
I don't know which case, sir, we are referring to, but you only carried out one program last 2 weeks before on one settlement mechanism. That time everybody was telling that SEBI charges are very high, and that is why people are not willing to take that settlement mechanism. So this question is contrary to your own program. So you will be in a better question to answer. You only conducted that program 2 weeks back. I was one of the audience. Then why the people are not participating in that scheme?
Okay, okay. Sir, is there any way by which such fraud can be stopped at the inception? I think this we have asked. Sir, is there any attempted fraud also punishable under the SEBI Act, or only successful commission of fraud punishable?
No.
Somebody attempted fraud.
Yes. The intent is enough. That is what the Supreme Court says in the matter of Rakhi Trading Company Limited matter, that if the conduct of the party is not fair, it will be treated as an unfair trade practice and the person is liable for action.
Okay. Sir, the SEBI's object is investor protection. But sometimes it looks like that whenever you are giving a final order and doing the disbursements of the amount through penalty, you are depositing fund to the consolidated amount fund of India. But investor is not getting anything. Is there any working going on in SEBI that paying the amount to the investor for this?
Sir, under the, see, first of all, I would like to clarify that the amount disgorged does not go to the consolidated fund of India. The penalty levied by the adjudication process under section chapter 6 of SEBI Act, that is the money which is deposited with the consolidated fund of India. The amount which has been disgorged, that is the illegal profits made by the fraudsters, is credited to the Investor Protection and Education Fund, which is maintained by SEBI. Please don't confuse with the fund which is there with the MCA. So in this fund, there is already a position for restitution. So what that provision says is that wherever the amount has been disgorged, whether it is possible to find out who are the investors who can be compensated. If you remember, SEBI did that exercise in that IPO scam. I do not know, because unfortunately people's memory is not very good in our system. In the IPO scam which happened sometime 15 years back in 2005, 2006, whatever the amount which was disgorged from the so-called fraudsters, SEBI identified the IPO subscribers who would have got allotment in the public issues and who have been denied allotment because of those fraudsters. They have been compensated on some formula. So SEBI has done, and SEBI has the right and the obligation to do under that investor protection regulations. So wherever it is possible, it will be done.
Okay. One question somebody is asked, which I will reply. Agenda is drafted well in advance by the company secretary and other top management executive. Therefore, independent directors have no special role and are supposed not to be out of the agenda. Please give your views. So my views is very simple. I think sir can add that any director can suggest changes in agenda, or they want to bring out anything in the agenda. And if an agenda is there, so no restriction to any director, including independent director, to put any item in the agenda that is there. Sir, any view on yours?
No, I concur with you. Nothing more to add.
Okay. Sir, there is a one recent success story we have seen in Satyam case and ILFS, that save the business, attack the fraudster. What is your view? Because if you attack the business means if you combine the fraudster and business together, then the business will lose, employee will lose, client will lose, tax authority will lose, shareholder will lose. So what is the status in the mind of regulator relating to Satyam success and ILFS, which is going on, that we should attack the fraudster, not the business?
Yes, sir. I do not want to get into specific cases because every case is has its own unique characteristics and features, and therefore the process followed or decisions arrived at could be different. But the regulator, in my view, what I feel is, since being associated with the regulator for more than 3 decades, we always punish the concerned people who are behind the committing the misdemeanor and the misconduct. We very rarely go after the company unless the fraud is, the magnitude is very high. Even in cases which I have highlighted, the persons who have committed the fraud are being what you call charged. For example, in the front running case, the the dealer alone has been charged. We have not charged the broking outfit or the broker where the trading accounts were opened. We have only charged the persons who have done this misconduct. So we are conscious of that. And of course, even we all know that the IBC provisions are also for that only, that the person who has done the mismanagement is kept away and the company they are trying to save. Unless and otherwise it is not possible, it goes for liquidation.
Okay. Sir, how effective tool is forensic audit and how they are successful?
I showed one case. If the forensic auditor does his job, it definitely can come out. The case study number 2 is very clear on that.
Okay. Sir, one very important issue is coming, role of Indian regulator or Indian investigating agency. Their legal side is weak. They may be good for asking in questions and doing something, but when they are preparing cases, the legal aspects are very weak. What is your suggestion and what do you think that how you are improving your legal aspects? Because in the court, the big advocate can demolish your case, whatever you have done the better way.
Is that person having the statistics?
No,
He
no.
wants me to quote the statistics. He should see the SEBI annual report. Our success rate is so high. First of all, many of our orders are not even appealed. People have accepted, and all those recent orders which we have passed, the people have simply come and said, please maaf kar do, and then please let us go away. Whatever you want us to pay, whatever punishment you want us to undergo, we are willing to undergo. And many people do not even go on appeal. Number one. Number two, out of the appeals which we have preferred to SAT, our success rate is quite high. Even in the cases which are lost in SAT, and where we have gone on appeal to Supreme Court, our success rate is substantially high. If someone wants specific numbers, they can refer to SEBI annual report. And if the person still not satisfied, he can send me an email. I will give him the correct position, exact figures to satisfy that his understanding or his assumption is incorrect.
Okay. Sir, a very interesting question. And last 3 questions I will ask you. Whether SEBI is looking at violation with regard to related party transaction also to be penalized under FUTP? In
Yes,
recent time, example, Kirloskar Brothers, cases of Mr. Saurabh, CEO of Ambit, which were matters of PIT, penalty has been imposed more than 1 crore using FUTP. This is a new trend. Do you think this trend is a still warning for in respect of insider trading matters and even otherwise?
Sir, SEBI's view is that we have the right to, punish the people who are responsible for doing something which has got impact on the securities market. Even not only in this, even in the GDR matter, if you see the Supreme Court order, SEBI got the right of jurisdiction, although the money was raised outside the country, by issuing an instrument outside the country, which is not regulated by SEBI. But the condition is, by manipulating something, if it has an adverse impact on the Indian securities market, SEBI has the right to intervene and SEBI has the right to take action. And we have been doing that for the purpose of clarity. We have also amended the this prohibition of unfair trade practices regulations recently to bring clarity and also an explanation to say that this type of manipulation of books, ciphering of funds, diversion of funds. All these things will be treated as a fraudulent activity and an unfair trade practice and accordingly punishable under SEBI laws.
Okay. Sir, what is the impact of insider trading on investors? SEBI has not been able to completely put hindrance on this. And in this context, are your views?
Sir, as I said, insider trading in order first to see, as you pointed out in your presentation also, there are two types of insider trading takes place. One is first of all communicating the non-public information. Okay. That is where we are, to be very honest, to most of the regulators. It is not only the challenge for Indian regulator, it is for almost all the regulators in the world, that how did a non-insider gets this information first of all. So if you have a case which I highlighted where the managing director of the company is doing, it is very easy to find out and charge. But if the managing director passes on the information to a secondary insider, and if that person does insider trading, it is difficult to find out. So first problem in insider trading is to establishing this communication. Now, as we know, we are able to now accessing the call data records. We are able to find out where the mobile tower is located, where the person was located. Although we have no access to, get the transcript of the conversation, that is not possible. But technology is able to help us. What is the probability of that person having communicated the person to the other person? So to that extent, we are able to do that as far as communication is concerned. And second thing, recently we have introduced the concept of maintaining the structured database. That is where all the information, who is receiving, who is giving, what is the nature of information, everything has to be stored in a non-tamperable form, so that SEBI will be able to find out. It is to mainly to address those what's up type of cases. This is from the communication point of view. Now, going to the trading point of view, yes, we are also deploying new technologies to find out whether somebody is able to make use of this information and do something. You will come to know maybe if you conduct a similar seminar after 6 months, I will show some of the case studies by which the orders will be passed. So you will come to know that.
Okay, sir, the last question which I will ask you, the question is what kind of action SEBI can take if MD, CMD were foreign national and when manipulation done in the listed company?
I don't think there is any difference between Indian national or a foreign national. Any person who has coming, because the SEBI Act only says any person. Any person, the regulations also talk about any person or any entity. So where you are located, your geographical location or nationality, I don't think matters to us. That is what my limited knowledge on that. Maybe I don't want to get into areas which are not I'm conversant with. But my view is that any person does mischief in Indian securities market is liable for action under SEBI Act and the regulations make guarantee.
Okay. I think, sir, I have received various questions and I'm receiving continuously, but the questions are more related to brokers and brokers things. And if you want to give, because one settlement scheme is going on, if you want to give any message to the public at large, sir, for settlement scheme, because so many questions I have received, what they should do. They are saying we have done profit of 60,000 rupees and 5 lakh rupees settlement fees has come, what to do? So I can just ask you, because it's a good opportunity to communicate today. Tomorrow is the last day.
Sir, just now you asked a question that SEBI penalties are very low. Now you are asking another question that somebody has made only 60,000 rupees profit. Why SEBI is asking him to make 5 lakh? See, these penalties are, the disgorgement is actually proportional to the profit or the loss the person profit made or the loss avoided. Penalty cannot be commensurate with the profit or loss made. Penalty is for the misconduct. So I don't want to say whether X is more or Y is more. It is for each person's decision-making process to decide. But as far as I know, settlement scheme, as you said, is the last date is tomorrow. It is a very good scheme. it is, it is a win-win situation for the person who has allegedly committed the fraud, because SEBI has made the allegation and that person may or may not accept to that. That is his choice. So under the settlement scheme, it is a very good opportunity to come out of this, because as in the last session when you had about 2 weeks back also, this is a matter which happened about almost 7-8 years back. So it is better to settle the matter and then come out of it. This will be my advice. But however, in each case, the concerned person has to take a call.
Thank you very much, sir. Thanks for your very lively question answer, and I have receiving some comments. People are sending quite informative on disclosures. One of the best webinar I attended. So thanks, sir, for your very informative discussion, and I thanks to all of you for participating in large number. We received more than 1,000 registration and 580 people were came for this program, and still 269 is still participating. Thanks to all for encouraging us. Thanks to all that we can the way you give encouragement to us, we regularly try to do this. Sir, my heartful thanks to you for your lively presentation, as well as your giving question answer very effectively and with conviction. And the way you have given, I think the basic purpose of this program was to aware the fraudster that they should know that how the regulator is active. The way you have presented all the 3 case study and the last case study where you have gone to the ATM and gone to the all the bank accounts and other CDR detail, that is remarkable. And people are thinking that SEBI is just doing this something which is receiving and confined to their office. They can go out also. So no doubt, I ask you, are you awake? So you are awake also, and you can bite also. So that way, thank to you, sir, for giving a very lively and nice presentation. Thank you all. Now, friends, I have to just make 2 announcements. Tomorrow we are organizing a program of personal succession planning, and this is very interesting program which we are doing. And this program is based on what is the need of significance of will, step involved in precaution for preparing will, and succession planning and planning through corporate restructure, as well as tax planning. All these things will be there, and Dr. Kumar Agrawal, our partner, he will discuss this issue, and he will discuss, and this particular program is useful for everybody, even you are multimillionaire or you are you are having sufficient asset in your place, or you even if you have a 1 and 2 assets with you. So this is a good program. I'll request all of you to please do. And the next Friday, which is always we are doing next program on Friday. The next Friday, that is 6th of November, we are organizing program on Gift City, Gujarat Investment Finance Tech City, concept, facilities, and the opportunities. And we have invited Mr. Manoj Kumar, Executive Director of Gift City. He will address us and he will tell us what are the advantages of this gift city and how people should understand, because gift city is a foreign jurisdiction in India. You can do like this is in Singapore, this is in Dubai. So in place of going Dubai and doing restructuring, it is better to do this in the same way in India. So I request all of you, we will send you information to register and it will be useful. It is not only for the stock market trading, it is for all types of things, tax planning, structuring, and various other things. So please join us. And I thank all again, especially Mr. Sundareshan. We have no words to thank you. You have prepared a very nice presentation and it was lively presentation. And friends, this video is available on YouTube also, and we will send you link also, and you can use this. So thank you.